Hello folks, welcome to another video. Today is going to be a little different. We're not going to cover news. We're not going to be looking at market conditions. The price that you're going to see here is because we're recording this video a day earlier because on Wednesday I'll be out with the family. So I'm going to show you what strategy do I use to sell my options, which we've been very profitable here. I'm actually working on a website for you to track these options instead of seeing them like two legs, separate legs, and then you have to do the math. You're going to be able to just input the data. It's going to show you a little payoff chart. It's going to show you the P&L. You can add if it was profitable, if it was not profitable, how much it was profitable for, and it's going to create a little list of strategies within a dashboard. I'm still working on that. The strategy list part is done, the dashboard part not, but I'm going to show you my strategy today in this video. So let's jump right into it. Starting with here, let's actually switch to this one. Let me zoom in. If we go here to trade history, you can see that we have been very profitable. We're looking right now at the trade history, and you see there's always a sell, a buy, a sell, a buy, a sell, a buy, a sell, a buy, so on and so forth. And here we have the P&L for all of them. You can notice the pattern that one leg, the leg that we buy, usually expires worthless, so we lose 100% of that. And then the leg that we sell, that one we actually collect a premium. So you can see 0.99, 0.2%, 0.1, 0.2, 0.8, 0.8 again. And here we have the P&L between what we lose and what we make. That is the difference. This spread is how much the premium, the net premium is, how much we make here net premium. So what I want to show you is that we usually spend some and then make more back. So why do we go with spreads and now with just naked options? Because with naked options, you're putting all of your capital in risk. You can lose everything. If you're selling naked options, you're getting a lot of risk. But when you cap it with another leg, you create a spread. And a spread, even if you put $10,000 like I do, $10,000 of margin, I'm not going to lose all of that. My max loss could be 2,000, 3,000, but no more than that. And the max loss is just going to happen when we get below that leg. So usually what I do, I tend to have the buy leg very far out of the money, and the sell leg, that is the one that is going to give me the best premium. So that one usually tends to stay closer, not at the money, but closer to current price. So I'm going to show you, I'm going to open right now. I'm going to tell you where I get my information, what I look at the charts, what I analyze, and we're going to do that together. So I usually tend to go right here to CoinGlass. You can go to TradingView. You can go whatever you feel comfortable with. And right out of the bat, I switch to the 1 hour and I can see the 200 moving average, which is very strong. We love that here. This is a very good moving average. It held perfectly right here. So we held here, and we could say that we held here as well because we have the moving average from the Bollinger and we have the 200 moving average as well holding. So that is bullish. Another thing that is bullish, we are getting more volume and we are above the VWAP. So that is also bullish for the short term. You can see whenever we cross the VWAP and we have volume confirming, we usually go long and we test then on the moving average. Here is the 9, and then we tested here, which was the 9 and the 200 together. So very good. Again, we're above the VWAP and above the moving average. So bullish once again. So I have that bullish vision. I know that the 200 moving average will hold me here on the 1 hour chart, and the 9 moving average will hold me right here in the 4 hour charts, right around the 2560. So what can I do right now? Well, most likely I'm going to look to sell a 2550. This is what I'm going to do right now. I go right here, I switch to sell put, I go to the 2550. And I put usually 40. This is how much, no, too many. I usually tend to stay between 11,000. So maybe we go for 38. No, that's still too much. 36. Yeah, 36 seems fine. I'm getting $4 per contract right here, and I have 36 contracts. So what I do, I switch back here. Usually I hold my shift button and I go all the way to the 2550. Yeah, around 3.16%. I think that is decent. That is a decent margin. Of course, this fluctuates whenever there's higher volatility or lower volatility. When there's lower volatility, you can even go 2% sometimes because the market's not going to move. When there's higher volatility, you can go 5-6% sometimes because you're going to get still very good premiums. So what I'm going to do is sell this right here. It was how many contracts? We go right here and we see 36. So now I switch to buy and I go 2450, which is the lowest one we can go, and we're gonna go with 36, right? I click on open position. and yes. So now I have that open right here. So I know that I received 127 to open this sell put right here, and I paid 47 to buy this put right here. So you can do the math manually on how you can calculate that. I'm going to show you that to you, or you can just throw it on ChatGPT and give it a quick prompt. For example, I opened a spread. This is a put spread. The current price of Ethereum is 26.33. For example, I sold 36 contracts, I bought 36 contracts. The total price for these 36 contracts was 127 and was 47, and the margin was 11,300 and blah, 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 blah. What is my ROI on the margin that I used? So it's going to give you the information that you need. But for example, you can just open the calculator right here and you can do that manually. So what you're going to do is 127.8, and we're going to subtract the 47.88, which gives us 79.92. If we multiply that by 100 and then we divide that by the 11,357.28, that will give us 0.70%. This is what we are getting here for this strategy. We're getting 0.70%, a very risky one, but I'm showing that to you live. If I was doing that on my own before I recorded anything, before I did anything, what I would do is I would test all the other strikes. So what I did right here when it switched to sell, I would go, well, I was on 25.50. Well, I will go to 25.25. I could actually switch to table right here and take a look at these prices. You can see between the 25.50 and the 25.25, there's more than $1 difference. So I know that my premium will be way less right here, my net premium. So the difference between what I pay and what I receive will be super different. These are things that you need to account for. And as I said, my goal is usually to stay between 0.3 and 0.7. These numbers vary according to the implied volatility, the total volatility of the market. So where do we look at the implied volatility? We have a website for that called theblock.co. I show that all the time to you guys here on the channel. So if you want to check it out and always be on top of volatility, on top of everything, usually I show the block every video or every other video. So here you have options, you have information on options. So aggregated open interest for Bitcoin, the volume of Bitcoin, the volume of Ethereum, so on and so forth. But if you scroll down, you can see we have right here the vol, which is the implied volatility for Bitcoin and Ethereum. You can see volatility went down, but that was from yesterday. It says today, but I don't know what is the time frame right here. It says it was updated today, but we got very good premiums, so maybe it wasn't calculated yet on the topics. You usually want to sell high IV and then wait it out so the IV can drop and you can make more money this way. You can get higher premiums with safer strikes than if you were with low volatility trying to do the same spreads. So here you can also see the variance premium, how much the premium changed up or down in the same region by calculating the same region. If you were like 10 days ago, if was it going to be higher or was it going to be lower? This shows you that. The put to call ratio, which tells you, are they going more towards puts? Are they going more towards calls? Here is what this chart says. The higher the number, it means there are more puts. The lower the number, it means there are more calls in the market. Then we switch to what actually matters for me, which is the implied volatility. And here on the implied volatility, you have a lot to choose from. At the money 7, 30, 90, and 180. Usually because we do 0 DTs, the 7 is the only thing that matters to us. So if you want to just to click on the 7 and use that instead, we don't need to know everything else. If you are an OG of the channel, which not many of you are, but those who still watch, if you are an OG, you remember that before, maybe 3 years, 4 years ago, we had IVs of 120, 180. We're naked options. We're making like 7 to 8% per week. So that was bizarre. And I don't think we're going to see that anymore with these big coins like Bitcoin and Ethereum. Maybe with Solana, we're going to see some high volatility like this as well. But for Bitcoin, usually it stays around the 50. And for Ethereum, we saw 80, 85 a few times, but usually is between 60 and 80. So that being said, going back here to the topics, now I have the two open, and usually you see that these numbers are going to be in the red for most of the day. Why? Because there's a bid and ask spread that when you open these positions, there's that little war between bid and ask prices. So you tend to get in with the negative P&L in the beginning. But this one, what we want to see is the buy one going down to minus 100%. and the sell one being green, and here the closing price going to 0. These will stay the same. This one we want it to go to 0, and this one we want to go to 0 as well. Just like we see in the trading history, we go right here, closing price, all of these are null, they're all 0. So this is what we want to see. So hopefully this made sense to you. If you did, comment down below. This is usually how I trade. Usually, of course, I tend to spend more time, do more due diligence. Sometimes I even go and read the news, because some news might affect the market in huge ways. But because today is Tuesday, usually we're good. But closer to Friday, closer to Monday, we tend to have news, maybe stock news, maybe government news, but things that could affect the market. So I stay very, very careful when I do these at the beginning or the end of the week. But hopefully you were able to learn something. Of course, 0.7% is a little bit sketchy. If you're just a beginner, I'd advise you to go for 0.2%. If you're able to make 0.2% per day, you're going to have a huge return in 1 year. You're going to have over 60% return in 1 year. So that is fantastic. Imagine first year holding stablecoins, your stablecoin wallet grows 60%. This is the best yield farm that you can imagine. So hopefully you're going to be able to get that from now on. And with this, we wrap up this video. Thank you so much for watching. I'll catch you guys on Friday. Until then, take care. Peace.